Hello everyone, welcome back to the Stock Pundit, a place where we give you the higher take on investment, finance, business, and self-development. And on this episode, I will be giving you, or I will be analyzing 5 stocks, or I will be sharing with you the 6 best ETFs that are proven to be recession resistance, and they can withstand any economic downturn. So let's dive in. A comprehensive investment strategy focused on navigating recession by leveraging historical resistant exchange trade. That is what we call exchange traded fund ETFs. The best 6 ETFs to own during a recession. This is just a guide. 2025. Recession as wealth transfer mechanism. I'm going to be covering you and providing you and giving you the other side that recession is not just recession is just not just don't just take your wealth away or take your things away, take your money away. Recession is a time to transfer wealth. It's a wealth transferring period if you're ready, if you're prepared for it. And this video reframes recession as period where wealth shifts from panic-driven sellers to strategic buyers. This perspective is crucial because it shifts the investor mindset from fear to opportunity, encouraging preparation rather than reaction, recognizing recession as a cynical, predictable event roughly once a decade, allowing investors to plan their move strategically. This insight is surrounded by historical data showing sustainable return for those who buy during downtime. 2. Psychology of investing during economic disruption or economic downtime. Fear triggers a survival mode, pushing most investors to sell assets prematurely, crystallizing losses and missing rebounds. Loss aversion means loss feel twice as painful as a gain feel good, often leading to irrational decisions. Understanding these psychological biases is as important as understanding market fundamentals, as overcoming them enables investors to act contrary to the crowd and capture exceptional returns. Gold as a recession hedge. This is number 1 ETF. Gold ETF provides a diversification tool that historically appreciates when stock declines. Central banks' increased gold purchase highlights its enduring value as a safe haven. Despite no income generation, gold's low correlation with equity and bonds makes it a vital portfolio component during crisis. Balancing risk and protecting purchasing power, allocating 5 to 10% to gold is a prudent safeguard recommended by many financial gurus or advisors. And number 3, dividend value ETF for stability and income. Dividend paying companies tend to be more financially stable with strong balance sheet and consistent cash flow. Even during recession, dividend value ETF like SCHD, that is Schwab's, offer investors a way to generate income during downturn, which can alleviate psychological stress and provide capital to reinvest at a lower price. The compounding effect of reinvesting dividend during recession can significantly accelerate recovery and growth. Okay? And number 4 is all-weather balance ETF for economic agnosticism. The ALLW ETF, based on Ray Dalio's all-weather philosophy, investment philosophy. I think you all know Ray Dalio. It's designed to perform well across growth, recession, inflation, and deflation. Its diversified allocation includes stocks, bonds, gold, and commodities that respond differently to economic scenarios, to different economic scenarios, reducing portfolio volatility and mitigating risk without needing to predict market movement. This approach offers a sophisticated alternative to traditional stock-heavy portfolio that struggles during downtime. And the next is the short-term government bond as a safety net. ETFs like VBIL, which invest in short-term US Treasury bills, offer both safety and yield with minimal interest rate risk. These bonds typically move inversely to stocks during crisis, acting as a shock absorber that stabilizes portfolios. Including 15 to 30% of such low-risk bond, enhancing liquidity and provide what? A financial cushion during volatile periods. And the next one is consumer staple and utility ETF as defensive sector plays. This sector sell essential products and services that maintain demand regardless of economic conditions, providing steady cash flow and resilience. Consumer staple ETF like VDC include companies with strong brand and pricing power, while utility ETF like XLU represent regulated monopolies with predictable earnings, allocating around 10 to 20% to staple and 5 to 10% to utility, balance defensive protection with growth potential, minimizing portfolio drawdown during recession. And the next is strategic portfolio construction and discipline. This is very crucial. This ETF is cohesive and portfolio with specific allocation target. It encourages investors to invest 10% in gold, 20% in dividend values, 25% in balanced all-weather, and 20% short-term bonds, 15% consumer staple, and 10% utility. Implementing this strategy via dollar cost averaging will over time or several months avoid poor timing mistakes and emotional allocation shifts. This methodical patient approach builds a financial fortress capable of weathering market storms and seizing opportunity when price falls. A long-term mindset as a key to wealth building. The overarching lesson here I want to emphasize is that wealth in a recession is built through preparation, patience, and rational decision making rather than emotional driven reactions. Investors who understand the underlying economic and psychological dynamics use ETFs to diversify and stabilize their portfolio position themselves to turn uncertainty into long-term growth. And my take on this video is that once you come to understand these combinations and how they all play, each and every single ETFs here, you'll benefit immensely by combining gold, dividend stocks, balanced all-weather funds, government bonds, consumer staples, and utilities. Investors can build a resilient portfolio that mitigates risk, maintain income, and capitalize on discounted asset price. The emphasis on psychology, diversification, and disciplined investing offers wisdom backed by historical evidence or historical data, helping investors transform recession from fear crisis into opportunity for financial and wealth building and advancement. Folks, if you've enjoyed this high analysis, could you just hit that like button and set that notification bell so that you don't miss out on any of my future analysis. Subscribe to the channel so that you signal to the YouTube algorithm that this video is a valuable content so that they can push it out to their audience. Until next time, take care of yourself or yourselves and each other. We love you. Take care. Bye-bye.